When the money printer comes on and dollar liquidity increases, Bitcoin's the fastest horse. For those that haven't noticed, the stock market and Bitcoin, which are traditionally very correlated, they've diverged. Bitcoin has found itself in this kind of weird sideways to bearish market as of recent, and 2025 was a very frustrating year for a lot of people. Everyone thought Bitcoin was going to go to the moon, 4-year cycles, blah, 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 blah. Bitcoin's been highly correlated to US liquidity, which is, by the way, guys, it's what we always wanted. Bitcoin is not a hedge. Bitcoin is a solution. It's the antithesis to fiat. The more they print, the more it goes up. Bitcoin will win as long as fiat fails. You don't want non-free market. You don't want nationalized market. You want a free market. You want the truth. That's what Bitcoin allows. Real property rights, real freedom of speech, real free markets. That's what we're here for. That's what we're building.
The United States stock market is moving toward a more managed, government-influenced structure, and most people don't realize how quickly it's happening. For years, Bitcoin and the Nasdaq moved together because both responded to the same force, dollar liquidity. When the Federal Reserve increased liquidity, both assets rose. When liquidity tightened, both pulled back. But that pattern recently broke, and the divergence is becoming impossible to ignore. Bitcoin has followed liquidity downward, behaving like a true free market asset. Stocks, meanwhile, are holding near all-time highs despite tightening conditions, which signals a powerful new dynamic shaping the market. Crypto analyst Jack Mallers explains that the U.S. government now treats artificial intelligence and advanced technology sectors as matters of national interest, similar to how other major nations protect industries they consider vital. Because AI contributes heavily to economic growth, a severe decline in those stocks could slow the broader economy. To avoid that risk, policymakers are working to support strategic sectors through guidance, incentives, and financial backstops. That means parts of the stock market now operate with government influence rather than pure supply and demand. It can stabilize things in the short run, but it also means political priorities can shape market outcomes. For example, when leaders discuss regulating industries, whether aiming to support consumers, encourage competition, or strengthen the economy, markets respond immediately. Mallers notes that Bitcoin remains one of the few major assets still driven entirely by open market forces. That's why Bitcoin has diverged from stocks, and as government involvement in traditional markets grows, that separation will matter even more for Bitcoin's future price action. Let's watch clips from Jack Mallers' interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
You know, I think the stock market is becoming nationalized. I think markets are becoming a public utility. A political utility. They're becoming policy. And Bitcoin, importantly, is not. Obviously, it really can't. You can't control it. You can't nationalize it. And these things have started to diverge. Now, albeit Bitcoin's diverged to the downside while stocks have remained relatively performant near all-time highs. And I'll explain that in a second. But the fact that they've diverged is really important. It's really telling. And some of the math, if you take a deeper look into this idea, whilst you also do a little bit of the math, I think it tells a very clean story of where we are, what's going on, and what the next chapters might look like. And the stock market's still hovering around all-time highs. I'd like to make the point that I think that the stock market is currently being nationalized by the United States. It's obviously already nationalized in China, but it's being nationalized in the United States. Markets are now a political utility. We should not think of them as a free market. We also should not think of them as an expression of currency debasement. You know, human beings are natural optimists. A lot of our doing is placing a premium on the future and building for the future. In fact, money is the most effective technology that we've invented to allow ourselves to do that, to create value today, bring it with us tomorrow. And so technology and things like the NASDAQ have historically always been an expression of currency debasement. Now, not a great one, not a perfect one. They're not supposed to be monetized. They're equity, they're not money. But nonetheless, they've traditionally been that. And all of a sudden, they're not. So let's take a closer look. So this comes from Arthur Hayes. There's 4 lines on this chart. The gold line is the price of gold. The red line is the price of Bitcoin. The green line is the NASDAQ index, and the pink line is the US dollar liquidity index. Let's state some obvious truths from just looking at this chart. One, Bitcoin is highly correlated to the US dollar liquidity. The pink line and the red line move together. You can see the pink line has been a slow sideways to downwards drag. What does that sound like? That sounds like Bitcoin's price action, a slow sideways to downwards drag. Now, weirdly, the green line was also historically very correlated to Bitcoin and to the US dollar liquidity index until recently. Until end of Q3 and Q4 of 2025, the green line has decorrelated from Bitcoin. The NASDAQ has decorrelated from Bitcoin and has decorrelated from US dollar liquidity. If US dollar liquidity is tight, if markets are weak, Bitcoin will tell you that, and it has told us that truth. Why has the stock market not reflected that? Now, in gold, the other obvious truth is that gold has had a smashing last 18 months, record highs, outperformed everything. Let's talk through this. First of all, China, $1.2 trillion trade surplus. That is a record. China had a massive 2025. This from AP. China's trade surplus surges 20% to a record 1.2 trillion, even with Trump's tariffs. This from Bloomberg. China's $1.2 trillion windfall quietly seeps into global markets. And so we run a $2 trillion deficit. There's $2 trillion worth of trade surplus on the other side of that deficit, and that money gets repatriated back into the United States, into our capital markets, into our farmland. And that's why we have an artificial premium on our shit. You want to know why your real estate is unaffordable? Well, because institutions and Chinese investors are bidding up all the nice real estate, bidding up all the stocks, bidding up all the farmland, bidding up all the high quality food supply. And so the point is there's a few points here. One, China's buying a ton of gold. When prices move like gold has been moving, that means there is a price insensitive buyer. There is a buyer that does not care about the price. They're buying no matter what. Who are these price insensitive buyers? China, Russia, India. US treasuries are no longer safe. They're no longer viewed as risk-free. They're no longer viewed as reserve. You're seeing these countries remonetize gold. And when you think at the size and scale of $1.2 trillion, that is what is moving the gold market, for one. You have sovereign nations remonetizing neutral assets. That's incredibly bullish for Bitcoin. Bitcoin will catch its bid on the back half of that, and we'll get to when and how in a second. But the fact that the world is moving away from debt-based, treasury-based reserves into neutral reserves is incredibly bullish, not only for Bitcoin, but for humanity. We need to get back to being governed by Mother Nature, back to being governed by money that's neutral and fair. Two, China is pouring a ton of their capital into US technology. There's probably a lot of reasons for that. It's a good hedge for them. They want to pulse on AI. Also, there's some really interesting geopolitical strategy here. It allows China to basically intertwine itself into the US stock market. If the yuan strengthens too much, China's going to need to pull capital out of the US to finance its own self, which will destroy the US stock market because they have such a concentrated position. So it also gives them a lot of leverage. Because the US is so financialized, our greatest export is the dollar, is our stocks.
Mahlers points to China's record $1.2 trillion trade surplus as proof of what is driving markets. Over 60% of that surplus, more than $800 billion, went into foreign assets, and most of it poured straight into U.S. tech stocks and gold. China now owns more foreign assets than Japan, and its holdings exceed a quarter of the entire $30 trillion treasury market. That money is propping up the NASDAQ while Bitcoin reflects the truth about tight dollar liquidity. Gold has been the biggest winner because sovereign nations like China, Russia, and India are buying it regardless of price. When prices move as gold has been, it means there is a price-insensitive buyer who does not care about cost. U.S. Treasuries are no longer viewed as safe or risk-free, so these countries are remonetizing neutral assets. That is incredibly bullish for Bitcoin because it will capture the same bid once it becomes structurally large enough to absorb sovereign capital flows. Bitcoin's market cap sits at $1.85 trillion, and China's annual surplus alone is $1.2 trillion. According to Mallers, Bitcoin is not big enough yet to handle that kind of flow, but it is getting there fast, and the fact that the world is moving away from debt-based treasury reserves into neutral reserves is bullish not just for Bitcoin, but for humanity.
And so let's get back to this idea that Bitcoin and the NASDAQ have diverged. And I write here, AI has become nationalized by the United States and China, which is why the stock market is levitating higher than dollar liquidity. Because the point here, and you can see the delta and the arrow here, you've got the NASDAQ in this gold line, Bitcoin in the white. And again, Bitcoin's been highly correlated to US liquidity, which is, by the way, guys, it's what we always wanted. Bitcoin is not a hedge. Bitcoin is a solution. It's the antithesis to fiat. The more they print, the more it goes up. Bitcoin will win as long as fiat fails. That's always been the thesis. You've always wanted the best expression of currency debasement, an alternative monetary system. Now, why has the NASDAQ stopped being correlated to dollar liquidity? I make the argument that markets are now political utility. Because of AI, they've been nationalized. They've been co-opted by the state. And, you know, to summarize what I'm about to explain in detail, it's really this idea that the United States has decided that it is of national security interest to win at AI, to be competitive. And by the way, AI is now comprising of over half of our economic growth. We've already went over this as well. 50% of the US economy is AI related. Why is the NASDAQ levitating up and above US dollar liquidity? Why is it diverging from Bitcoin? Why is it Bitcoin looks weak? You know, it's like, oh, Bitcoin's down 2% on the year and the NASDAQ's at all-time highs. What the f-? Well, it's because it has a nation state bid. That's why. And people will say, well, that's a good thing, right? No, I'd be careful. Here's the thing. If we've learned anything from China, a nationalized stock market is good because you get unlimited money from the government to prop the stock up until it isn't. You don't want non-free market. You don't want nationalized market. You want a free market. You want the truth. That's what Bitcoin allows. Real property rights, real freedom of speech, real free markets. That's what we're here for. That's what we're building. Because I'll tell you this, it's all fun and games until the national interest doesn't align with shareholder interest. The stock market is becoming nationalized. It is really critical that we as Bitcoiners understand what this means, what is happening. Markets are political utility now. They will use them to win votes. They will use them to pay off the indebtedness of the United States. They will use them to soften the economic blow that all of us have to live through. But they are not free markets. They are no longer expressions of currency debasement. This is a huge deal. Bitcoin remains king of property rights, king of free markets, king of freedom of speech. When the dust settles, this is going to be a huge, huge deal. There is only one thing you can truly own for free in your brain that is your property, and that expresses currency debasement perfectly. Stocks are no longer that. Now I get it. It's frustrating that they are at all-time highs while Bitcoin is Bitcoin's only telling us that US dollar liquidity is tight, that markets are weak. It's doing what it's supposed to do. I'm not mad at Bitcoin's 2025 performance at all. Listen, of course, I want Bitcoin to go up 1,000% a day. But the reality of the situation is I own it for the properties that it has. And US dollar liquidity went down. And so I expect Bitcoin to go down too. And we've reached the point of Ponzi where the US government's true interest expense is higher than its receipts. Why America? Ponzi-nomics. So much so that the US government is going full-blown China and is nationalizing the stock market. And the stock market is no longer an expression of currency debasement. So all of this to say that the money printer is coming. So to bring this back, here is Bitcoin and the US dollar liquidity index. Again, you can see them. They're deeply correlated, okay? And you can see them bottoming out a bit. It looks like, so the US dollar liquidity index here is in the white. It looks like US dollar liquidity bottomed out late last year, right before QT ended. And we've been saying it on the show. We called it. The level of quantitative tightening that we lived through from post-COVID boom until this last December 2025 is immense. People say, what if China dumps all of its US treasuries? What the Fed did was orders of magnitude worse than China and Russia and India and Japan dumping all their treasuries. The Fed erased over $3 trillion of assets. It shrunk its balance sheet from $9 trillion to $6 trillion. Markets were tight, and it looks like that has found a bottom. The Fed's balance sheet is expanding. We know what Trump's plan is here, and it looks like Bitcoin is trying to find a bottom as well. Okay, here's my expectation for the money printing that has to happen. Again, we are in Why-America. We are in Ponzi-nomics. The stock market's being nationalized. Trump has to print the money. They don't have a choice. And it doesn't matter, Republican, Democrat, left, right, red, blue, it doesn't matter. One, the Fed's balance sheet will keep growing. Two, commercial banks will start lending again. A huge piece of the money printer is the commercial banking system. And when we talk about the United States nationalizing things like AI, what they're going to do is have people like Jamie Dimon lend incredible amounts of money, effectively risk-free because he knows he has a government backstop to these becoming strategic sectors to America. And three, housing. One, we're starting to see it. This is the hostage video from Jerome Powell. Rates will come down. We know this because true interest expense is higher than our receipts. We know this because the only expense item that they can bring down is the interest cost. They have to get rates down because we are living through Ponzi-nomics America.
Mallers makes it clear that the money printer is coming, but it has not started yet. The Federal Reserve stopped quantitative tightening, which drained over $3 trillion from markets, but has not yet begun to expand the balance sheet seriously. Rates have not come down. Commercial banks have not yet resumed lending. The prediction markets do not expect rate cuts anytime soon, possibly not until Jerome Powell is gone. That creates a gap between the narrative, which says Bitcoin is about to explode, and the reality, where liquidity remains tight and markets are getting ahead of themselves. Retail sentiment has spiked to dangerous levels. Goldman Sachs data shows bullishness at the highest readings seen only 3 times in the past decade, and 2 of those times were followed by sharp corrections within 3 months. The S&P 493, the companies outside the Magnificent Seven, have started outperforming the Mag 7, which signals the AI trade is running dry. Miners are slightly net short while retail is slightly net long, another classic setup for one last flush before the real move begins. Mallers is not saying Bitcoin will not go higher. He is saying it might shake people out first. The fundamentals could not be more bullish. US dollar liquidity has bottomed, the Federal Reserve's balance sheet is expanding, and commercial banks will start lending again. JP Morgan just announced a $1.5 trillion security and resiliency initiative to finance critical industries like AI, defense, and critical minerals, all at the direction of the government. Trump announced $200 billion in bond purchases to lower mortgage rates. The money printer is warming up, but the timing might not match expectations, and over-leveraged positions could get destroyed before the real move begins. The stock market is becoming a political utility used to win votes and soften economic pain. Still, it is no longer a free market or an honest expression of currency debasement. Bitcoin remains the king of property rights, the king of free markets, and the only asset that will honestly reflect the currency debasement coming. When the money printer finally turns on for real, Bitcoin will be the fastest horse by a mile. But patience matters, because markets might wash people out one last time before the real run to $150,000 or $200,000 this year. The opportunity is real, the math is clear, and the people who survive what comes next will be the ones who stayed humble and stacked sats instead of chasing leverage into a trap. Do you think Bitcoin's divergence from stocks is a warning sign, or is it proof that Bitcoin is the last free market left? Please leave your thoughts in the comments below. Thanks for watching. Don't forget to like and subscribe.